What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we are testing critical support levels across the board in the indices, and if we break down through these support levels we'll more than likely get that next leg lower. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down just over 1% and we are back down to this very critical support level at 428. So remember, if we start breaking and closing below this level, we're looking for a retest of SPY at 420, and below 420 we're more than likely going to see a prolonged period of weakness in the stock market, a bear market in the triple Qs, and weakness going through at least the end of March. So these are very critical support levels at 428 and 420, so watch those levels very closely. We have the confirmed bear trend with all the moving averages stacked to the downside, and all of the moving averages are negatively sloping, so we still do have a lot of bearish momentum. So the only thing bullish right now is going to be in the price action because we clearly have the bear trend. So if you see a strong bounce off of any of these support levels and you start to see an impulsive bounce and breaking through resistance, that will be your first sign that the bulls are still out there buying the dip. If we slice through support like it's not even there, that means there's not enough buyers at that level and we're going much lower, and we are going to make that next leg lower. So this is going to be a very critical test and you need to watch the price action very closely. All of the benefit goes to the downside because that's the direction of the trend, and you always want to remember that the trend is your friend. Going against the trend is very risky, so if you're buying at support, you want to be considering taking a lot of your profits at resistance. To the upside, you're looking for resistance at 433 and 439, and our 20 simple moving average right around 443. Your bullish breakout isn't until we get back above 450, so don't be getting overly bullish in SPY until we can get back above 450. Above 450, the next bullish breakout is all the way back up here above 457. So give all of the benefit of the doubt to the downtrend until we get one of those bullish breakouts and continue to watch these very strong support levels. On the NASDAQ 100 triple Qs, we were down 1% today and we did close below that support level right around 340, and we did also retest the low at 334. So the triple Qs are now testing bear market territory because if we break below 334, we more than likely are going to see the triple Qs dropping 20% from the all-time high, and that will classify the triple Qs as being in a bear market. Below 334, we're going all the way down into the 320s, so this is going to be a very critical support level. You can clearly see we have the bear trend, and you can clearly see all the moving averages are negatively sloping, so give all of the benefit to the trend, which is still in the downward direction. To the upside, we'll need to see the triple Qs getting above these resistance levels at 341, 352 to 353, and your bullish breakout levels will be back above 354 and then getting back above 361. Above 361, we'll still need to take out the high at 370, so there's still plenty of resistance to the upside, and we still do have a bear trend. So watch this very critical support level on the triple Qs at 334 because that is the last critical support level for the bulls, and if we don't see strong buyers at that level, we are going to go down for that next leg lower. In the Dow Jones, we were down 1.46% today, and you can clearly see the Dow Jones also has the bear trend, losing that support level at 338, which increases the probability we're coming back down to close this gap at 331.6. That should be a strong support level because it's also the previous low. So if that level does break down, remember that we're also below the weekly neckline for the double top. So below 340, the Dow Jones is looking a lot weaker. We still need to see where we close by the end of the day on Friday, but right now the Dow Jones is below a very critical support level and coming back down to more than likely retest this low right around 331.6. So your bullish breakouts are back above resistance at 340 and then getting back above about 347 to 348 and getting back above the 50 EMA, which is currently sitting right around 351. So you can clearly see all of the indices are in bear trends and testing very critical support levels. So if we start to lose these support levels with the price action, you should be expecting to see that next leg lower. The trend is your friend, and right now the trend across the board is still in the downward direction, so you need to continue to respect the fact that there could be more downside coming. On the Russell 2000, we were down 1.41% today, and we're very close to breaking down through this very critical support level right around 196 to 197. You can see we're starting to close below that level now, which significantly increases the probability we're coming back down to support at 191. Below 191, we're more than likely trending towards 170 with support on the way there at 183. So this is going to be a very critical support level for the Russell 2000 with the bullish breakout levels back above 200, 207 and getting back over the 50 EMA right around 208. But you really shouldn't be getting bullish until we can see price action getting back above 212. This is very clearly a strong bear market with a strong downtrend, and we're now starting to lose this support level right around 197, so watch for the next very strong support level at 191. On the ARKK ETF, we were down 2.18% today, and we did close below 64, which means we're more than likely coming down to the next support level right around 60. If we lose support at 60, we're more than likely trending towards 50, and this is very clearly a very strong bear market, so don't rule out the possibility we can break down through 60 and get all the way down to 50. We have the full bear trend and all these moving averages are negatively sloping, and we won't have a bullish breakout until we can get back above about 73 to 77, but we really can't get bullish until we get all the way back above 91. So everything from here should be a bounce shorted at resistance until you see the bullish confirmation and we lose the bear trend. Get a lot more cautious below 60 because we're more than likely going all the way back down to $50. But don't rule out the possibility this could also be the bottom, and from here we could start to see another bullish impulse. We won't know until we get the bullish confirmation of the breakout, so don't be getting overly bullish in a bear market. On the VIX, we were up 3.82% today, and we continue to see the VIX struggling to close above 30. Intraday, we did see the VIX right around 32, but we continue to close lower than 30, which is telling us that the VIX is struggling to break out. However, the VIX does have a bull trend and it's still very elevated, trading well above 26, so you still need to be very cautious of a very volatile market that could lead to a bear market the longer the VIX stays above 26. You really can't get bullish until the VIX gets back down below 20, so if you're waiting for bullish confirmation, you need to be patient and you need to wait for the VIX to get back down below 20. Everything in between this range is going to be a very volatile whipsaw, and this could lead to mass panic, which could lead to that next leg lower if we do see the VIX breaking out above 30. On Bitcoin, we're currently up about 2.45%, but we still have Bitcoin trading below 38,000, and it's very likely trending back down to retest support at 35,000 or 31,700. Below 30,000, we're more than likely going to see the Bitcoin bear market going all the way back down to $20,000. Your bullish breakouts aren't until we get back above 46,000, with an early warning sign back above the 50 EMA, which is currently sitting at 42,000. We do have the full bear trend, and we're very clearly in a bear market, well off of the all-time high, so you still need to respect the fact that this is a strong downtrend, and we could still be heading lower. On NVDA stock, we were down 1.07% today, and we see NVIDIA finding support at the top of that gap, but that gap doesn't fully close until we get back down to about 228. Once we fill that gap, we could find support, and that could be the low, but we won't have bullish confirmation until we close back above 260 and then get back above 271. We're very close to having the full bear trend, and if we do get the full bear trend and lose support at 228, we're more than likely coming back down to retest the low right around 209. You have upside resistance levels right around 236, 243.5, and that level at 253. So watch those resistance levels and respect the fact that there is a lot of downward momentum. So once we close that gap, we could still be coming back down to retest the low. On Tesla stock, we were down 4.14% today, and we did see a bearish development in Tesla stock gaining the full bear trend at the same day that we closed down below that very critical support level at 827. So we're more than likely seeing Tesla stock entering a prolonged bear market the longer it stays below 900, and definitely the longer it stays below 827. You do have this final low of support here right around 792, but if you lose that level, you could be seeing Tesla coming all the way back down to about 709. So this stock is definitely going to be a lot weaker now the longer it stays below 900 as it continues to develop bearish momentum. You really can't start getting bullish until Tesla stock can get at least back above 940, but more importantly, get back above about $1,000. You have resistance levels on the way there at $860 and right around $900, so watch those levels closely. On Apple stock, we were down 1.78% today, and we did see Apple breaking down below that level at 168 last week, and that does mean we were coming back down to 162, and so far that level is holding up as support. We did get an intraday bounce off of that level, but if we close below that level, we could be coming all the way back down to 157 and then 153. Your bullish breakouts now are back above 168 and then 169 and getting back above about 172. This is very likely a correction in Apple stock, and the question is just how low could it possibly go? If we take out this low at 157, it's looking a lot more bearish, so that is going to be by far the most critical support level below 162. On the financial sector, we were down about 0.5% today, and we could clearly see the price action below all the moving averages, and we're very close to developing a bear trend. The industrial sector was down 0.97% today, taking out this previous low of support and building up more bearish momentum as the bear trend strengthens. The healthcare sector was down 0.25% today, trading below all the moving averages, and you can very clearly see the healthcare sector does have a bear trend. The energy sector was down 1.62% today, very close to losing the bull trend and closing below the 20 simple moving average, and also very close to losing the support trend line. If we see the energy sector rolling over from here, don't forget that we do have 2 gaps to fill to the downside. So jumping back over to the S&P 500, this is definitely a very critical test of support, and we do have bear trends in a lot of the indices as well as the sectors. So there's clearly a lot of bearish momentum which could push the stock market for that next leg lower, but you can't rule out the possibility this is a very strong support level, and there's still the possibility that it does hold up. So follow the price action and you'll know exactly where the market's going from here, but do respect the fact that the trend is your friend and the trend is still in the downward direction. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility in a brand new trading year, I think now is the best time to be a bank member. You can find out all of the information and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.